interesting show today. Well, I don't know. That's for you guys to judge. So I usually just come here randomly talking about some stuff. Okay, let's see. So I was scrolling down on my... Oh, hello, Marantz, the man of the hour. Welcome. Thank you for joining. Oh, good. Okay, good. Thank you, Michael. Are you a friend or a foe? I always ask this because, like, I never know. People coming in here, since I'm so small, you know, a small YouTuber, you never know. Okay, 1 second. Okay, that. Try to adjust it so that I could see my chat here, you guys. Sorry. Okay, so how's everybody doing? How are you, Marantz? I know you've been making videos. He's a GME guy. Okay, good. Good to know. Now I feel more comfortable now. Good. All right. Okay, since hold on, let me text Lionel real quick. Just so you know, Marantz, I know like Lionel has been like promoting my channel on your channel. He works with me. Now he moved to a different state, but you know, we worked together for a long time, so let me text him real quick. He might be at work though. Alright. I'm grinding baseball game. Oh, nice. This morning, then 10 hours of work. Man. Yeah, I actually introduced Lionel to your channel, and he was hooked ever since. It's like, and so, yeah, you're doing a great show, and he's always like admiring you in that sense too. All right. So since I have a couple of people here, I'm not gonna keep you waiting. So I usually start my show by just look at the price action, and you know, yesterday was I just feel like was boring, right? It's always boring. It's the most boring stock ever, right? To cover, so to speak. Now, I said that in the best sense of the word, because, I mean, this is my theory. I think that anytime you have the most boring stock in the world, you better, like, pay attention to it, right? Because that's the best time to buy, when people are not looking, when people are not paying attention to it as much. This is the best risk to reward opportunity. When it's too popular already, you know, remember when the news broke about GameStop going to the moon, so to speak, was right here. Like, it's already too late for you to jump in at that point already, right? And so just keep that in mind when people are talking great about this company, or at least just say, hey, GameStop going up to $100,000, right? Now that's a ridiculous amount of price action. I'm just exaggerating here. All I'm saying is that when it's on the news, it's usually too late for you to buy in, right? In my humble opinion. So that's why, you know, people should be paying attention to GameStop right now at this moment, because it's boring, right? So just count yourself lucky to be here in the in this video, in this live stream or whatever, and yeah, take it as it goes. But so what I've noticed yesterday was here, right here. It's 2.2 million shares being traded. That's nothing, right? That's less than 1% of the float. So, all right. Oh my God. Okay. All right. BLACKROCK buy in in wait, buy in means they're going up. What will going up? Okay. Oh, you mean like it means that it goes up? It's going up. Yeah, I saw your video, the most recent one about BlackRock. That's why I put it up there. But I want to kind of to verify the number real quick though. I don't know if it's going to go up, honestly, because of the institutional buying in. I just have the inkling that, you know, just like you said, they need to short it, right? It's not like BlackRock is trying to promote GameStop in that sense. I think, of course, they want to position themselves before the run, so to speak, so that they, you know, could sell it off to retail investor at a higher price. That's how they make money. Thanks for yeah. Thanks. Of course, you deserve it, Marantz. You know. So you've been grinding for 3 years and spitting out the truth. So that's on you. You know, you deserve all the accolation. I think, you know, people in this world has been, in my opinion, obviously, has been elevating the wrong people. You know, we need better leadership, so to speak, and that's why, again, that I speak about it before. This is why I gravitate towards you, gravitate towards Ryan Cohen. You know, the leadership needs to be changed in some way. And, you know, we affect change in small little corner of the internet here. But I think, you know, it's a meaningful, way of saying, hey, we need some change here in the corporate America, in the landscape of the internet, that you don't need to lie to people in order to gain, you know, followers in that sense. So even though, you know, covering GameStop doesn't give you all of that immediate hit, right? Like being popular and all that stuff, but that's meaningful because, you know, you're not gaining fake follower, so to speak. And it just make it more meaningful, you know. So therefore, I admire you in that sense. Okay. Michael Tucker, yes, BlackRock position increase in GameStop is a positive. Yeah, of course, I agree with that. Hey, what's up, Lino? Lino's here, the man of the hour as well. Okay. Alright. So, alright, so what am I saying? Okay, so, I was gonna talk about SPY real quick. Look at this. So SPY went up, all-time high, right? And of course, like I was looking at, like, why is it going up and all that stuff? Of course, it's pumping, like they're pumping it up so that March, you know, come March, it's going to be a bloodbath, right? That's just my opinion, obviously, but there's some data backing it up, right? Now, I'm going to wait a little bit longer to talk about the BlackRock position before that, you know, and sorry, 1 second. So, I've talked about the bond market before, you know, in relation to SPY, and why is the market keep going up when you know, all the smart money, like, so to speak, right? I hate to use smart money, dumb money and all that stuff, but that's just the terminology that they use to describe, you know, institutional buy-in and all that stuff, and what are they positioning themselves. And usually when the large institution position themselves in some sector of the market, you might want to pay attention to that, right? Because again, they move the market. We don't, as a retail investor. All we could do is that, you know, whatever they're doing, you just copy it. With the exception of GameStop, obviously, we have, you know, a unique position here. So, in my opinion, obviously. So, they've been talking about like the 10-year yield here, and it's been kind of crazy if you look at the chart. It used to be like 5% or something, or 4.5, so to speak, and then now it's down to 4. Okay, and now it's down to 4.14 right there. Sorry, let me take a drink. So what does that mean? It means that, well, coupon, it just means that if you buy it from a certain entity, like the straight up from a discount window, so to speak, you get a little bit more of a rate, right? You could pay a little bit more. And again, like it's kind of complicated, but and there's only a certain window that you could get to that discount window. That's why it's called discount window, right? Coupon, so to speak. So you might not even get that, but if you go to the regular bond market, you're going to get lower rate right here. So the majority of people would get this rate right there. And there's been said that the institution has been positioning themselves to buy the yield of the 10-year at this yield because they are expecting something to hit the fan, right? So I was watching this particular video here. So let me play a little bit. So I tend to speed them up, but let me slow them down a little bit here.
And interest rates started to fall. So there's
Hold on.
And here again in the next week or two. So what's going on, man? What's the number one thing right now that's really rocking the U.S. economy?
So the 10 year is kind of a curious case, right? All through last year, right up until about Halloween, just straight up and to the right. And then Bill Ackman comes out, announces he covered his short on U.S. Treasuries, and interest rates started to fall. So there's a lot of conflicting messaging in the mainstream financial press. They're saying, well, this is people are front running the Fed anticipated rate cuts. Well, if everything is so good, why would the Fed cut? Nobody's asking that question. You know, unemployment at historic lows, as they love to remind us, asset valuations all-time highs across the board. Why would they cut? You know, you cut rates to stir more lending, to stimulate. Well, what are they stimulating? It's already rather stimulated if you believe that what's going on the surface. What really I think is happening is the Fed doesn't control the 10-year, at least not directly. I mean, they can mess with their balance sheet to affect it, but really the Fed only controls the short end of the yield curve. The long end does what it wants. And when I see yields dropping on the 10-year, that is big money positioning for safety. And, you know, that's happening while gold is hovering pretty close to all-time highs, around $2,000 an ounce. So the 10-year Treasury is not telling us the message that the media is giving us. They're telling us the soft landing, the economy is great, even no landing, that, oh, we've made recessions obsolete. That's not what the 10-year is telling us.
Why do you think the media is not publishing that?
The media makes its money, at least the financial media. They are paid by institutions that have a financial interest in keeping that bubble inflated as long as possible. So, you know, ultimately they're beholden to the people that pay their checks. So I think there's a little bit of that going on. Anytime you're dealing with the press, you're going to have political influence. So that could be playing a role. And then, you know, there's just the ownership class, if you will, the super wealthy in this country have benefited tremendously from this sugar high economy that is destroying the middle class, driving a lot of people down into the lower class, even below the poverty line in this country, while asset valuations are at all-time highs. So they're obviously seeing all the benefit from this erosion of savings and standard of living of the middle class. So there's certainly financial incentives to keep that narrative going.
So tell us, I mean, what's the breaking point? I mean, what's broken with the economy? I mean, if we have the cheerleading on one side saying everything is great, and we have, you know, the pressure on the Fed to drop rates, or the pressure is coming from the banking industry, Wall Street, the White House. I mean, maybe the pressures are coming from all kinds of angles to drop rates. I mean, we're looking at a time where banks are, they're said to be not in great shape. So, you know, what's the breaking point? I mean, at what point? I mean, what's really? How do we fix this?
I mean, ultimately, asset prices have to come back down to earth, right? We've been talking a lot on sidebars about how home values, the price to income ratios, that obviously not sustainable. And you look around in America's cities at people living in tents and people being priced out of the housing market. Home prices need to come back down, or incomes need to radically rise. Well, the Federal Reserve is not going to let the incomes radically rise. They've told us that. They're watching wages. They don't want to see wage spiral inflation. You know, that Keynesian boogeyman that hides in every closet, according to the powers that be in the financial press, can't let people make more money. Well, then the home prices have to come down because people can't afford to rent them even. And the cost of rent right now is about 40% lower than the cost to own in some markets. So if people can't even afford to rent them, then obviously those costs of ownership are not sustainable. And a lot of those investment properties out there are not going to be cash flowing, and it will hit the market soon enough. So I think home prices need to come down. As far as what is broken in the economy, probably be easier to talk about what's not broken. I mean, really, unemployment is the one thing that I still see as a silver lining. It's still pretty low. There is some underlying weakness in the jobs markets, like we're losing full-time jobs and adding part-time jobs. We're seeing rises in multiple job holders. That's not a sign of prosperity. That's a sign of people getting desperate, and that's also lower standards of living.
People are holding 2 and 3 jobs.
Yeah. And, keep in mind that that's a statistic, that's a number. When you're looking at these charts and these reports, and I believe it was 222,000 multiple job holders added last month in the jobs report, that the market, the press was saying it was so good because of the headline number. That's 222,000 cases of dad is not there to tuck the kids in at night, or not at a little league game, or mom has to leave right as the kids are sitting down and needing help with their homework to go work the second job. That's people's lives being ruined behind those numbers there. And it really is gaslighting to see them go out in the press and say 216,000 jobs added on the headline. Stop reading there. Everything is so good. And you're even...
Anyway, sorry, I didn't mean to play that long. But the one that I was kind of pay attention to, obviously all of that is important. What he was talking about, how the economy is not actually doing that well, right? And of course the financial press, how they're corrupt. We all know that, kind of being in GME, you kind of know, like all of the press are bought and paid for, and so to speak. That's why they don't talk any sense at all, right? When you're paying attention to the number, you don't really get the full picture unless you are actually like looking to the number yourself. And kind of like, again, come with your own conclusion, right or wrong, right? Because that's all you have is your ability to come out with your own conclusion on things. Because if you're relying on, people to interpret it for you, you might be swayed either way. Now, again, right or wrong, right? Now, if you think that the press is telling you the truth, right, you better live and die by that truth. So if you think it's a soft landing, then you're going to position yourself as a soft landing. Buying stocks, buying everything that you can, thinking that, everything is going to be rosy, at the end of the year or whatever, right? But if you have a contrarian point of view, you would position yourself accordingly, right? And to me, GameStop has been doing that for many years, right? They know they know this is happening, and they're just positioning themselves, right? Whether it's doing cutting job, cutting the number of stores, cutting the warehouse thing. Remember, people were talking about the York distribution center being closed down, as if it's like the end of the world here. I'll address that later on too. But I mean, Morantz has been, talking about it as well, so I agree with him. So it's not really something new here. But let's go back to the bond yield right here, because this is the most important point that he was making about how big money has been positioning themselves in the 10-year Treasury bond, and that's usually a sign of trouble because this is what they agree to, right? Whether it's 4.5%. So they are happy with 4.5% yearly, right, for 10 years. So what does that mean? It means that, well, here you go. So I found another video here, and I watched this gentleman before, George Gammon here. Let's listen in about how he thinks about that rate.
Extensive as I get when it comes to math formulas. So correct me if I'm wrong, but again, I know I'm right because just conceptually it makes sense. So what we're going to do now is go over to the whiteboard and kind of think through this equation in terms of the real world and in terms of what financial players are incentivized to do. What's driving this? What is their motivation? Because really all we see, all the yield curve is an expression of people placing bets and people, just the market, right? It's just kind of a signal. They're data points telling you what market participants are doing. So then we got to ask, well, why are they doing this, right? So we get back to the whiteboard, and we've got nominal interest rates equal real interest rates plus inflation. Now, another way to look at these real interest rates are simply growth, right? It's growth, because if you look at GDP as an example, when you start nominal GDP and you strip out the price increases, that would be inflation. And when you strip out the price increases, then what are you left with? You're basically left with growth, right? So we can look, another way to look at real rates is just growth in terms of the Fisher equation. Okay, cool. So let's add some numbers in here. Let's just assume for a moment that nominal interest rates are around 6%, and inflation is around 1%. Okay, well, that means that real interest rates or growth would be 5%, roughly. Again, very, very simple, makes sense. But what we have to understand, we got two keys here. The first key that we have to remember is that if you are an investor, if you're a bank lending money, if you're Stan Druckenmiller, something like that, if you're a hedge fund manager, or if you're just lending money to your best friend, you want a return on that money that compensates you for the risk that you're taking. You'd like a little bit of profit in there as well, above and beyond the risk, but you have to take into consideration future inflation expectations, because you don't want to just be paid back plus interest. No, the whole point here is to lend that money so when you get it back, not that you have a bigger number in your bank account, but you have more purchasing power, right? If it's not about purchasing power or increasing the purchasing power, then no one would lend money. No one would buy a stock. No one would buy an equity. It's all about return on investment, but it's not nominal gains. It's real gains. You want to increase the amount of stuff that you can buy with what you started with. Okay. And what we have to understand is this, what I call like a risk premium, is going to be not only risk, and you can see it's below this word, I've got minimum here. We're going to get to that in a second. But you've got risk, your cost. So let's think about this through the lens of a bank. If a bank is extending a loan, if they're creating more currency units to lend you, whatever, $500,000. Okay, now they're crediting your account with 500,000 currency units that didn't exist before. But that's not cost-free. So as far as creating the currency unit, yeah, there's no cost to that. There's simply keystrokes. But as far as maintaining your account, well, there's a cost to that. Because you're going to call and you're going to have to transfer the 500,000, and then you're going to have to, or maybe you keep the 500,000 in your account for a while and do all these things, and you got to pay you interest. There's a cost to those currency units that were just created. It's not zero. Okay. Now they've got risk there as well that you're not going to pay them back in addition to inflation, and they're going to want to increase their purchasing power. So there's going to need to be a profit as well. So let's just assume for a moment that all of this risk, cost, profit equals about 4%. That's our premium, if you will. Okay, now let's look at this through the lens of the Fisher equation, assuming that nominal interest rates are interest rates the bank is going to be willing to lend at, or maybe interest rates a hedge fund manager, Stan Druckenmiller, is able, they're willing to lend at because the risk reward makes sense. Or even what you're willing to lend your good buddy $1,000 for 3 years. What interest rate are you willing to lend him money? It's got to be an interest rate that takes into consideration the risk, the cost, how much purchasing power you want to add, and it's got to take into consideration inflation. Okay, so let's just assume for a moment that this number is not zero, which of course it's not. Let's just assume for a moment that it's 4%. So that's the premium that I'm talking about. Okay, well, let's go back to our original equation. If growth is 5%, if inflation is 1%, that gives us 6% nominal, but that doesn't include this premium that we need as an incentive to lend in the first place. In order to lend, now we need rates, not at 6%, but at 10%. You see? So now let's assume for a moment that interest rates are not 10%. Now let's assume they're right around 4%. Looking at the 10-year treasury, I'm just using it as a proxy. Pretty much 4%, close, excuse me, to where they are today.
Sorry, it's a long video here, so I hope you follow through with this one or follow along. So what he's saying is that, if the economy is doing better, they would have been, like waiting to lend out a 10%, right? Meaning that if the banks think that they could get a 10% per year, APY or whatever, they would not have lent it for 4%, right? Just like the way that it said right here, right? Or even 4.5%, So it means that there's something is going on right now to the point where they're happy with 4%. So that's what he's trying to explain with this equation or formula right here, because they're not expecting anything. So 0% growth is what they're happy for, happy to lend their money out, on the prospect of not getting anything much, but at the very least they get to keep their principal, so to speak, right? So if you have $100,000, for example, now in the context of the bank, it's like billions and billions of dollars, right? Or even trillion. So if you have $1 trillion, right, and you don't expect anything to grow in the economy, you would not have lent it out for 4%, right, rate. Now 4%, of course, accounting for inflations, accounting for the growth prospect, whether it's the market, the cost of money, so to speak, accounting for all of those, 4% doesn't really translate much in the future. That's what it's trying to say. And so if that's the case, that means the stock market is not going to do well in the next 2-3 years. Does that make sense? And so, well, how is this related to GameStop? Obviously, I will relate it to GameStop. But anyway, like, again, this is the macroeconomic, right? Like, bond market is pretty important. That's why people are talking about it. That's why people, all this big institution, they pay attention to bond market. Like, traditionally, bond traders are, quote unquote, smarter than equity trader, right? Because they know, seems to know ahead of time what's going on, right? And so, it's pretty important to pay attention to. But anyway, so I hope that's what you got from there. Let me play a little bit longer and see if he could finish up here.
So understanding everything that we've gone over, the need for this 4% premium, what would that tell you about future growth and inflation expectations if a bank, Jamie Dimon, Stan Druckenmiller, one of these financial insiders is willing to lend at 4% or close to this? Right? That would tell you that growth and inflation, what they see in the future for not George Gammon. No. Not some fearmonger on YouTube. Not some tinfoil hatter like me. No. This is the economic insiders. This is not a message coming from George Gammon, like I said. Okay? This is them telling you through their actions that you can read based on price, the price of money, that they see future growth and inflation expectations at zero. At zero. So if the economy was booming, if they thought let me take that back. If they thought the economy was going to continue to boom over the next year, 2 years, 3 years, they would not be willing to lend money at 4%. They would be willing to lend it at 10%. You see, George, well, what if there's no opportunities to lend? Fine. Then they're not going to lend it out. They're going to buy equity. You see? Because if growth is supposed to be so much better in the future, and if, let's say, the 10-year treasury was still trading at 4%, no one would buy the 10-year treasury. If you thought growth was going to be at, let's say, 10%, no, you wouldn't lend money. You'd buy equity because you want to participate in that 10%, especially when your alternative is 4%. The risk reward is way better with the equity than it is the debt.
That's important.
You see? But the fact...
So that's important because, like, how... Remember, people are up in the arm about how, Ryan Cohen doesn't give guidance and all that stuff. That makes no difference. Like, what he says makes no difference, right? What's make the difference is the action that's being presented right in front of you right here. So just like he's saying, like, if the bank think that they could lend out for a higher yield in the future, they would not have been happy with 4%, right? So the action for the bank says otherwise. So you just look for the action. Like, words doesn't mean anything. You just look for the number. What are they doing differently? So again, this is why Ryan Cohen. I don't know. I just like the style of his leadership. Is that he's there to show you the number, like what he could do, rather than telling you what he could do in the future. I think that speaks volume much more. You could kind of extrapolate more of the intent of the person based on their action rather than their words. Saying, like, word salads, means means to some people that it's pacifying the situation here, and but the reality is not. It's not usually match what words could tell you. But anyway, I hope I'm making sense to some people. Sorry, kind of a little bit flustered here. Island, what's up? Thank you for joining. Moran's that camel fact video. Oh, Camelot. I think you meant Camelot. That dude is gross. Yeah, I mean, I watched that one too, and of course, like, I've seen his video before, and always, like, it's entertaining, obviously, for people who are trying to trash GameStop in some way, and of course, it's always something very, like old information, like old leadership and all that stuff, and he keep honing on the fact that, GameStop is dying, GameStop is bankrupt, and and all of that stuff. But none of that really matter because we know what's up, right? We know that this company is setting up for an amazing growth right now. But again, like slowly, because look at this macroeconomic data right here, it suggests otherwise. So we might have a downturn. I'm not saying the price is going to keep going up and up and up here at the face of what is going on in the overall market. So, but what I am going to show you here is, hold on one second. So, let me see. Sorry, lost train of thoughts. Okay. Well, let's dive into it, right? Let's dive into it. I wish I could see like the cost average for this institution, so they don't tell you that. All right, so as you see in the title of this live stream, is that BlackRock has been increasing their ownership of GameStop, right? Now, Withdraw over here is saying that BlackRock will lend out their shares, and laughing emoji, right? Okay, that's fine, whatever. Lend it out. I don't care. Do your thing, right? But that doesn't, that doesn't stop. That doesn't tell me anything other than they're increasing ownership of this company. And if you look at, is this like an increase? Hold on, 20,000 share held. 20,000. Not quite sure what that means. Oh, share held times 1,000. Oh, okay. So this is an overall position for GameStop right here. So it seems like they decreased their positions from 2009. This is the run. They were lending it out, right? They are lending it out right there, and that's why their overall position kind of dropped around this time around right here. But now, ever since 2000, like last year actually. Look, this is 2000. At the end of 2003, right there. No, am I? No, this is before 2003, you guys. I wish they have a better, Am I reading this right? 1, 2. Okay, 1, 2, 3, 4, 5. Why is it 5? Oh, is this every quarter? Okay, sorry. Duh. So each line is 1 quarter, okay? So since quarter 2, like September 1st, this is quarter 3, sorry, September 1st, 2022. If you see that little box right there, it says September 1st, 2023, 2. So let's mark that right here. So we kind of get a visual on when when BlackRock increased their position. Okay. All right. So right there. Okay. Look at the little red box right here. September 1st, 2022. That's when you see this spike of ownership in GameStop, right? You don't see that on the news. The news never tell you about BlackRock, the biggest institution in the whole world, okay, buying GameStop. Of course, they want to put that under the radar, right? They don't want you to have an impression that this company is actually doing much better than anyone has been telling you, right? Anyone at all. Doesn't matter if it's Yahoo Finance, it's Charles Schwab and all that stuff. It's all meme stock, right? Why would an institution like this buying into a meme stock and increase it by, look, it's like 4 times, right? This is 4 times increase, and it's still kind of inching back up, right? So again, this is the total amount of shares that are being owned right now, okay? Well, right now I'm talking about like at this point in time, and then they continue and then they lent it out a little bit right here, or decreased their position. I don't know whether they're selling it out or lending it out. I have no idea. It just an overall position that they have decreased a little bit from here to here, right? Quarter one, from quarter one, quarter two, now quarter three, right here. And so if you were to compare year on year right there, that's around, like if you look at that's 21, that's 1 million share, 1.5 million shares more than they had before last year. So, okay, so if you were to mark that on the price point right there, so 1 year from now would be right, sorry, the most boring live stream ever, you guys. There we go. So if you see this right here, right, and you look at the price action right here, they have been buying 4 times, but look at the price, it went down, right? Makes no damn sense. Like how is this market run? It's ridiculous. And again, I bet you anything, this dip right here is so that BlackRock could buy at this rate. Again, I'm just assuming here. I'm not telling you anything here that is factual. So don't listen to me. Okay. Okay. So this is the price point that BlackRock bought at that time. Now I'm not saying again. This is me assuming because I don't know where the cost average is. Do they even tell you the cost average? No. I wonder if they say it in here. Let's see. Let me see. Look. Let me look at. Means literally nothing? What do you mean? Means literally nothing. Like, Winter, can you like, really? It doesn't mean anything? Okay, it doesn't mean anything. So what? So what? What doesn't mean anything? The fact that BlackRock bought into it doesn't mean anything? Increase their position doesn't mean anything. Okay. Well, how about, what if SoFi were to be advertised that, oh, you know, BlackRock bought into SoFi? Watch how much media would be like salivating onto that, you know, news or whatever. But it's ridiculous. Like the fact that you're saying that, you know, okay, it doesn't mean anything. What does it mean to you then? Tell me. Sorry, you guys. Okay, so I'm looking for the price, like the, sorry, wait, I think the company, and then Gamestop. Okay, so I'm looking for the most recent one here. I wish they have a way to sort out. There you go. Boom. Okay, so this is the most recent one, 2024. Yesterday, actually, when they filed this. So let's open it up for people to see here. I hope you could see. Let me. Yeah, let's open it up. Sorry, I know there is a delay here that I'm trying to wait until. Okay, looks good. All right, so let's look at. Because this is what BlackRock is reporting. December 31st, Just to verify. So they've been increasing their position right here. So it used to be $21.8 million. Now it's $22.5 million. Million shares. Sorry about that. And then aggregating by reporting each person. Okay, so they increased by 7.4% of their ownership, buying into GameStop. Now, they don't give you the price. I'm looking for the price here, you guys. At what price point are they buying it? They don't tell you. Of course. They're not going to tell you. Yeah, it's so frustrating, you guys. Like, this big institution, they get to scoop up so many shares without price action being translated into the marks of the price or whatever, right? So since I think it's a quarter thing, maybe they've been buying right here. Maybe this is when they bought into it. 61 million shares being traded right there, right? But at what point do they, again, like, that's not fair to retail investor, right? That they get to buy millions of shares without the price action translated for the run for retail. And that's why you have this type of thing going on, where they have off-exchange way to buy those shares without affecting the price. So, see, look, on Friday it was 68% being shorted, right? 68% being shorted. That's like, oh, okay, not. At least it's less than 1 million shares being shorted. So again, half of it went off exchange. You've seen at least 1 million shares, and I'm sure they've been kind of accumulating, and that's probably the off exchange right there. I don't know. I'm just assuming, right? I don't have any data to say otherwise. If you look at the right here, date filed, date affected, effective date, they went from this to this. Does that mean in one day, or what? See what I mean? So the last time they increased their position was right here, February 3rd, 2023. Right? So February 3rd, 2023. They went from 5 million to 21 million, or 22 million shares right there. Right? So February 3rd, what is that? Let's mark that date. February 3rd. Sorry, you guys. This is the most boring show ever. I hope you guys watch me like in 2.5 speed. Like, if there's any speed. Okay, so let me change that to green. A little bit more lighter so you could see it better. So February 3rd, you see that BlackRock actually increased their position from 5 million shares of GameStop to a total amount of 21 million shares, 21.9 million shares. Okay, I'm not just saying this. I'm looking at the actual numbers right here. Right? So what does that mean? It means that, I don't know at what point they buy into it. I'm just, extrapolating from that data to mean that BlackRock has been buying since, maybe around this price point right here, from here to here, right? Because that's a time frame. So from $22 to $16, give or take, right? Perhaps this is where the volume comes in, right there, after hours, so to speak. So that's why you see all this stupid gap that makes no sense after hours, and then it's just coming back down, and then buying some more, right? And in between here, this price point, BlackRock, or it, when did they file it? Hold on, I might have doing this a little bit backward here. So they filed on this day. Does that mean they've been buying since this price point right here, or moving forward? I think it's backward, right? Right here. At this price point. Okay, I'm sorry. My bad. Just ignore what I said earlier. Right here, this is the price. This is the price range that when BlackRock buys. Boom. So again, I don't know at what price point. I wish I know the price point, but that's the window of that report right there. 2023. Right? Yeah. But anyway, overall, there you go. That's the data right here. Oh my gosh. Okay. Sorry. It's $9 million worth, and they will loan them out. Okay, loan it out. That's not bullish. Okay. What? So are you saying that the increased ownership, the largest institution ever, they will loan it out for who to short? Who's shorting this? Right? And why would people want to short this stock anyway if they could help it? I don't understand your logic sometimes, but sure, you might be right. You might be right. So that's not bullish. So what would be the bullish case for you? That's what I'm asking you. So present me, at what point would you say, hey, GameStop is actually going to be in a bullish position here? So that's what I'm interested in, right? I understand your position or your whatever reasoning that BlackRock bought into it, and increased their position, and 4 times it used to be a year ago, right? That means not bullish. So what is a bullish case for you? Like at what point, like what does GameStop needs to do for you to be like, okay, I'm changing my mind? So yeah, that's what I need from you. Window. Stop pretending to be How are you here every day? I know. Not pretending punk, Ryan Cohen has pivoted into investing holding companies, so the potential I was looking for is now there. Okay. That's good. Yeah, disgruntled meme stock. Decade investor. Okay. You're not one more. Oh, thank you. Listening to the stream while I'm brushing my poodle. Oh, you have a poodle? That's so cute. Yeah, I mean, I don't know. I don't know what would be the bullish case for people to be changing their mind. But again, I think this is a good thing. But again, hey, these institutions obviously they have their ways of kind of playing the market up and down and all that stuff. Again, that doesn't really do anything much for a long-term investor here, because again, they bid the price up, they bid the price down at will here. And as long as we're doing great on the balance sheets, that's what I'm here for. So let's see, what else do I have today, you guys? Do you have any questions for me? How do you feel about the bond market? Like, anybody? There is no bull case. Okay, so then you're just pigeonhole yourself into not bullish case, and that's why you're here every day trying to convince me. Like, nothing that they could do to improve the company? Nothing that they could do, in your opinions? Like, that makes me feel like you're just a troll in that sense. You don't and forgive me for saying that. It just means that you're not open to changing your mind in any way, shape, or form. How is that growth? Like, how do you assess your life moving forward? If I said that, hey, Winthrop, you will never, ever be a grown-up ever in your life. What is that? That would make me a terrible person, no? Because that's not true. Like, human experience, you evolve to be better, I hope, right? Or strive to be better, and be open to being wrong at some point in your life, because you can't be right all the time. So for you to say there's no bull case, okay, what do you think is a bull case? If, let's say, GameStop changed something, what has Ryan Cohen done? You mean that's bull case? Huh? I have a per turtle. I like turtle. I XBid. I think this is the right XBid, right? I'm kind of like have a no, I don't think it's a right XBid. You guys, come on. Like, if you're making people. I think this is the wrong XBid. Lynn, her chat looks to be stuck on her side. I don't know what you mean, Lynn. Sorry, am I? Hold on. I think, sorry. I'm trying to read the chat right here. I think that's not the right XBid, right? North Star. Has Ryan Cohen done anything to grow revenue? Really? Are you still on that? What are you talking about? Oh, man. So growth in revenue is all you care about. You don't care about anything else but growth in revenue. Don't worry, it's coming. It's just not right now. You know why? Because the economy is shit. Have you not looking at what's going on in the bond market? What's the big money positioning themselves? Like, the half part of my show was about the bond market and how the smart money positioning themselves to only have 4% in the bond market. Like, do you not understand that? So where is that growth coming from? If, again, real growth come from the fact that you come from cutting. See what look. Growth profit. It's like, are you telling me that all you care about is how much you bring in and how much you couldn't keep? Like, if you bring in $100,000 a year, right? And let's say you only have 5,000 left, versus if you bring in, half of that, which is what, $50,000, right? But then you get to keep more. Does that make sense? What I care about is growth profit, right? And that's what you should care about. The fact that they're selling more stuff doesn't mean anything, because if they sell more stuff and they have more expenses, that's not keeping money. Like that's them just wasting away whatever the gross profit would have been, right? So that's all the metric that you're using is just decline in revenue. That's it. No wonder you're still stuck in in the Neverland over here, you know. And if that's all you're using, good luck to you. Like, go ahead, buy Nvidia, buy whatever. What's the other one? What is Apple doing? I don't know. Let me see. It's ridiculous to you know. Let me see. Well, how about Best Buy? Best Buy is like the most competitor we have here. Okay, yeah, revenue's down 9%. How about you go on Best Buy and say, hey, they're a terrible company right here, right? And guess what? Look, revenue down, and this is a trailing 12 in one quarter, but look at the gross profit, down by $100 million. If you compare that to GameStop, what is it? It's like, and you're telling me something that is terrifyingly, I don't want to call it, but you just fill in the blank. To me, you just like, again, you're just here to speak a nonsense here, you know. Okay, so look, decrease by 10 million, decrease, right? This is quarter to quarter, but let's look at yearly. You know why? Because quarters, usually it's too short of a time frame to go by, right? That's why you go yearly. You don't evaluate a company based on one quarter at a time. See what I mean? Because that's just dumb, in my opinion, right? Of course, I'm not a genius or anything, but the more data sample that you have, it's a better assessment on things, right? Because business cycle, usually it's on a yearly basis, okay? Not quarter by quarter. Yes, quarter by quarter, it's just, I guess it's fun to track. But if you want to be serious about it, you evaluate it by year, annual report, okay? So if you do the same thing, like let's look at Best Buy right here. Do you see what I'm seeing, Windrop? Like, are you reading at a different level of like understanding? I have no idea. Look, 10 billion versus 9.8 billion. What is the difference there? That's $700 million, right? Now you might say, well, you can't compare Best Buy to GameStop. They're two different companies, two different industry. No, I'm not comparing GameStop versus, you know, in that sense. I'm comparing the gross profit. That's the bottom line, okay? So if numbers doesn't make sense to you, I don't know what, like, what I'm trying to say is that Best Buy has a decrease of gross profit to the tune of $700 million right there. In a year, okay? And look at their revenue went down, okay? Now, if you could find a company, now if it's, again, if this company is much better than Ryan Cohen, this would have been going up instead of 10, you know, instead of $9 billion, you would see $12 billion, right? Because cutting costs, right? Cost of revenue or whatever. And then, and look at, hold on, operating expenses, right? So they still, I mean, it decreased a little bit, but again, the bottom line is right here. I don't know. Maybe I'm just dumb. Maybe I just don't know what I'm talking about here, but Maybe I'm just like, again, math doesn't make sense to me. Perhaps, I don't know. But you could kind of like 10 times, like if you were to eliminate 1 0 here, you could compare that. But again, maybe I'm comparing the wrong thing here. But as far as like this math, I like the math. So okay, Ryan Cohen is this generation Gordon Get Go. Who the hell is that guy? Okay, SpongeBob, or whatever you are. Okay, sure. What you mean? Like, what does he do to make you feel that way? Sales and revenue has done nothing but decline under. I know, I understand that. But like I said, gross profit is what I care about most. Okay? Right? Because you know why? Because that's the money that we get to keep as a business, right? If they increase their gross profit by that much and their revenue decline, that's a good thing in my book. So revenue doesn't mean anything declining. If that's one metric that you use, okay, go ahead. Like, what company are you buying? I don't know. Like, give me a company that you're like, oh, this is a good company. Like, give me that. And I'll verify it. You have been warned, don't cry when you have lost your whole investment. Don't cry and blame hedge fund, market maker, SEC. Okay, thank you for the warning. I appreciate the warning, SpongeBob. Appreciate it. I thought your chat was stuck. Never mind. Okay, sorry. Because I was I put this on the pop-up. So unless I do this, you won't be able to see your yeah. You still could comment. You could still comment on it. Brian Cohen is in there. Okay, I see that already. All you guys are going to be on the wrong side of history. 4-quarter swing on the balance sheets. Big money positioning themselves. 500 inclusive. Yeah. Again, it might take 5 years, for that to happen. I'm here for it, as long as it's a lower price and Ryan Cohen keep delivering, this type of number. Like, hey. You could say, I warn you, this is a shitty investment, and don't blame market maker, and blah, blah, blah. It's like, none of that really matter, right? You know why? Because this is actually a business that runs correctly, right? Now, eventually, they're going to come around and say, oh, we were wrong and all that stuff. The reason why they don't want you to get into this company is because it's at the bottom right now. And again, I'm not saying that the price action right now is at the bottom. It could drop. Sure, it could drop. But if you could find a company that is doing better fundamentally on the balance sheets and the price coming down like crazy, go research Amazon. When Amazon was like during the bubble, like the .com bubble, Amazon was at $1. And Jeff Bezos was like, while the price coming down, I see every metric going up. Like every metric, everyone, right? Now, what metric is he talking about? Signed ups and all that stuff. And again, and they keep grinding. He keep grinding and grinding and grinding, just like Ryan Cohen is going to be doing, right? And if you don't believe in Ryan Cohen leadership, then don't invest in this company. I'm not telling you this so that you could invest in it. I'm just here babbling on nothing at all. And I'm just showing you the numbers that I like here. Yes, I invest in this company. That's why I always said I'm biased in that sense, but come on, numbers matter. Words doesn't matter. If you say stuff like that, okay, cool. You don't blame. I'm not blaming it on hedge fund or market maker or anyone, because again, to me, they done nothing for the market. And I have my view on what they should have been doing, but it's like an HO, problem that we have in this market, that certain people get away with certain stuff. And if you don't live in this world, and if you don't feel the same way, okay, congratulations, you don't have that problem. But for regular people, we've been having a hard time, kind of thinking that the world is in my opinion, the world is turning upside down. That's why, when leadership like this come across, I'm like, oh, something different here. So again, I might be crazy investing in this company, but hey, it's life. I'm open to be wrong. I have yet to hear anything that you're saying that will convince me otherwise. So keep searching, though. I'm here for it. I want real reason, though. So far you're telling me revenue is down, therefore it's a terrible company. Okay, that's only one metric. Ryan Cohen. Okay, there's no need for them to exit. The short position, you mean? The whole sector is down because it's dying. What sector are you talking about? Gaming? Like physical? Are you still on that physical thing? It's like, as if they don't pivot. It's like, come on. There's so many options for Gamestop to do at this point. You know why? Because they have money to do it. They could pivot to anything. Right now, again, it makes no sense to do that because the economy is not doing well. Right now, the best thing that they could do is to survive. That's it. And they've been thriving throughout this calamity, so to speak, right? And it's like, what? It's almost like you're telling those rodent, and I'm gonna make an analogy here. It might not make sense to people, so I apologize. But when the meteorite strike and the dinosaur are all dead, and before that happened, you're probably like, why are those mice not growing? Like those rodent, they should be growing right now. They should be as big as this dinosaur. It's like, it makes no sense. You know why? Because there's imminent meteorite hitting the earth right now. You see what I mean? So, and who turns out to be the ancestor? I'm sorry. Who survived the most? It was that rodent, okay? Because again, they laying low. They are, the one that we're, well, if you believe in that, evolution and all that stuff, or, but what I'm saying is that when the economic calamity hits, the best thing you could do is to survive that blow. And I think GameStop is positioning themselves to do that, to do just that. Again, operating at a low cost of goods and services, and then still make some money in order to, position themselves to thrive when everybody is going out of business. Perhaps we could scoop up some good, business at the bottom dollar. $1 billion is a lot of money. I don't know how people could just skim through that saying that it's not nothing. Ryan Cohen has pivoted, said they would, endless opportunity. Yep, that's true. There is what I'm investing in, long-term growth, gonna make this company valuable. Yep, endless opportunity, laughing. You negative guys, not even gonna call you bear. Just negative Nancy. Good thing. See, you keep saying shit like that. That's why I don't, again, why should I give you any more, attention in that sense? Because you keep saying dumb shit like this. Ryan Cohen diluted? What do you mean? Like, what dilution are you talking about? And again, you've said this before on my channel, so it's ridiculous. Winthrop and Wetbush friends, we'll figure out what you want. Hello. Hi, Manuel. Appreciate you. You just said revenue growth over time, which they have now. No path to that to be possible. That's on your brain, right? Like, I see a lot of possibility. To me, anyway, sorry, let me take a drink. My dog loves listening to me more while he has his coat brush. Oh, thank you. So NFT marketplace, effective griff. Come on. It's not at the bottom. Okay, what is your bottom? What is the bottom dollar that you would put your money into GameStop? 0? I doubt it. Pluto doesn't like you, and you have the. Okay, my dog growls and bark. Let me see your name. Okay, so Moran's talked about PE ratio, and someone brought up getting dividends and going into the S&P 500. I'm now living off of sandwich and ramen with like the good old college days to buy more shares. You should mod. That's amazing. Like, I've been saving up like crazy too. So I worked in the dietary department, so I, get free food. So I'm so thankful for that. And yeah, I've been, saving up and not going out to eat and all that stuff. And again, yeah, to build my position in my most convicted play. It just so happened to be GameStop right now. And to me, it's a long-term thing, right? I explained it before, I have a Roth IRA and all that stuff I have 30 years to cash out of this company. So I'm not in a rush like most people would be. But of course, like if it rocket up to the price that makes sense to me, I'm gonna, X out of my position. But as far as like investing in this company in the long term after whatever price action that does, that I think, it makes sense for me to sell, I always tell myself, only after we're in the S&P 500 for at least, a year or two, that's when I'm thinking of selling, right? Until then, of course, again, the road to the S&P 500 is going to be a treacherous one, right? You have people like this who are not believing in the company, and then they come in here and just like, I warn you. Okay, thank you for the warning. I appreciate that. But hey, again, I have yet to hear any bear case that makes sense to me. You should mod and mute anyone against the narrative. What are you talking about? No, I'm not gonna mod anyone. Okay, Connected Thought, have heard of it. Go watch it and do your homework. They have no plan to grow. Okay, they cutting everything to the bone. Okay, so to me that's a good thing. You know why? Because they keep showing me this number right here. They cut everything to the bone, right? And they still deliver this type of number. Isn't that IPO? It's not IPO, sorry. Isn't that a good thing? It's like in your personal life, right, Winthrop? Let's say you have a massive amount of real estate in your experience, but those real estate is weighing you down because as much as money you bring in, on those real estate, you don't get to keep most of it. And so what's the point of having those massive amount of risk in this type of environment, right? And so the best thing that you could do is to cut down that footprints in order for you to at least able to breathe, okay? And have the ability to think about what is the next step to grow. Have you like considered that at all? Your personal life. Let's say you have way too many cars, but every single cars need insurance and maintenance and all that stuff. And so if you're smart, it's not the smartest thing is not to buy more cars or make more money, right? Because this environment you can't. Go ahead. Go find another job or something like that. Why would you want to extend yourself to the point where you become exhausted? Because when you work towards that, like second job, third jobs, and fourth jobs, right? You are not, it's not good for your health, right? And so the smartest thing for you to do is to eliminate, instead of having 2 cars, you eliminate 1 cars, right? So that you don't have to expend that much and overextend yourself, your health, your well-being, in order to maintain 3 cars. I hope that makes sense to you, right? If it doesn't, then I don't know. I can't help you. Hi, Jay. Thank you. I'm bullish on Gamestop. Probability is just around the corner of the core business model, and Ryan Cohen control of investment will create the additional revenue stream. Yeah, of course. Like the possibility is endless. Like I said, when the market dropped to wherever, right? We don't know when it's going to happen, but at least we have $1 billion to buy those company up, right? And hopefully it's companies that, it's going to, like companies like Amazon 10, 15 years ago, right? Companies like, no, not 10, 15, 20 years ago, so to speak. Company that has good balance sheets, but because of the market crash, again, I don't know when, people just panic left and right and sell those company. And so again, I'm not worried about that. And you're completely right, Michaels. Growing company always cut out fulfillment center and cut benefit for growing company. Always cut. As if GameStop is the only one. Say what the heck? Hi, Winthrop. I don't know. Did somebody pay you to be here? I'm actually very convinced that you're getting paid for everything you're saying. So yeah, keep up the work. Ignorance is bliss. Okay, thanks. That's good for you though. Like keep thinking that somehow you're being smart by just looking at one metric to evaluate this company, revenue. Okay. No wonder you're still thinking that this company is shit. Okay. The only reason it has cash is because of dilution. Okay. One dilution. Is there any more dilution after that? Like you're speaking of an opportune time, right? It was smart for them to dilute at that point because the price was like $400, and they sell 5 million shares for that billions of dollars. So they did a smart thing, Winthrop. That was a smart thing to do, and yet guess what? They did it without causing the price to cradle or anything. They just sell it to the market at the market offering, right? They didn't go backdoor dealing to some institution, right? And so leadership has been doing right. And guess what? They've been maintaining that cash for 3 years already. So you don't give them credit whatsoever for that? Right? It's like, again, coming out here making no sense whatsoever. asset, look at that. It's like, you know, yeah, some quarters. Is this quarter? Yeah. This is trailing 12. Look, this is from quarter to quarter, okay? Asset. They have more assets right here. $400 million worth of asset right there. That's the difference, okay? This one, they decreased by 300 million, but then next quarter, they increase by 400 million. So what is that? Is that shitty company? It's like, I bet you anything, if you don't see this quarter right here, you would have been like, look at the asset, it's been declining. Okay, well, it's not right now. So, I don't know what else to tell you, Winthrop. Whiskey diluted your brain. Do your homework. For the record, I like ramen. That's good. Yeah, I love ramens too, you guys. Oh, I can't. I literally buy a whole case for just me. It's my midnight snack. Love it. Grew up eating. I don't know if you guys have had. It's called Mama. Oh, it's like from Thailand. So it's the best ramen package. It's better than what you guys are used to here in the U.S. But yeah, it's go to like Asian market and usually like Vietnamese store. They usually have that. And I just buy the whole case and just eat until my heart content. Yeah, ramen is great. Love it. I have yet to hear a bull case and align with reality. What are you talking about? Like, okay. The fact that they maintain a cash burn, the fact that they cut stores, right? Cutting down the fat and have this much money leftovers, okay? And positioning themselves to benefit from the fact that they could buy any companies now, right? Use that billions of dollars right here, okay? Billions. There I said billions? It's $1.2 billion right now, and it's gonna increase. I have a feeling next quarter you're gonna find out by how much. But let's see, what am I looking at here? Yeah. See, retaining earnings. We could zero this out the next quarter. Well, not maybe 2 more quarters, because that's $200 million right there. Yeah, I mean, if the trend is going up that way, that's actually a good thing. And guess what too? Look, we have $500,000. Sorry, my voice is going. Sorry, Winthrop here makes me speechless at this one comment. But I appreciate your comment though. Yeah, it's not grounded in reality. Sure. Sorry, you guys. I've been here for a long time. Hold on, how long have I been here? You're not delusional. Okay, try to convince yourself that. Is it me that you're convincing, or it's yourself? I don't completely agree with Be More, but I admire that her conviction. Okay, Manuel. What are you not agreeing? I would love to hear your comment on what you're not agreeing with. But I appreciate that. Not paid enough, huh? Oh, okay. You're not getting paid enough. Okay, all right. Well, you're wasting time with me. Like, how long is that? Like 2 hours. What is this? I'm a small YouTuber. Why are you here to convince me otherwise? Makes no damn sense, right? You guys are ridiculous with your... Okay, ridiculous. Why do you have... Why do you have to promote it? What do you mean, why do I have to promote? I'm not promoting anything. I'm just looking at this balance sheet and I like it. Right? Why don't you go to other channel that's promoting AMC? Right? Again, like, are you ridiculously gonna say that to me? That I'm promoting something here? I'm presenting you a bullish case, so to speak. So what would you rather me do? Right? If I have people coming in here and say AMC is the best investment, how about you go to that channel and tell them how ridiculous their investment is? How about you go to that channel of SoFi right now being pumped left and right by people who have much more reach than I am. Again, like, look at my subscriber, 134, and that's a lot for me. So I appreciate every single one of you who subscribe to me. Again, like, I'm just here speaking nonsense, right? So what is the threat there? I don't have that reach, so don't come to me. I'm promoting something. Come on. Why do you have to pump the stock and get people to buy? That's illegal, by the way, to manipulate the stock market. This is not illegal. There's much better platform for you to say that. This is not illegal? What is this? Is this poop and scoop? Look at this financial media. What is this? Right? You know, there's so many other people. This financial media, right? What is this? I have an opinion, right? I have a position. I'm not pumping. You don't have to buy into it. If you don't want to invest in the company, don't. And I don't have that sway. Oh, sorry. Hold on, you guys. I need to take this call real quick. Sorry. Got a phone call. Yeah, so it's like, look, what is this? Best Buy Canada. Partners, like, what is this? This is news, right? What's the point of doing that? Have you heard SoFi before? It's like, this is not pumping? What is this? Let's listen in.
For Under 30 as we preview SoFi ahead of its quarterly earnings release. Joining us now, George Tillis, senior markets correspondent, as he does on Under 30 here to close out the show. Now, George, I was reading something on Bloomberg, and they talk about this company as the one-stop shop that's winning the young affluent. Now,
what is this? Is this not pumping? Why don't you go there? It's like saying that this is illegal.
Apparently, I'm neither in that
you need
crowd,
a license
young or
to talk
affluent,
about
or
the
combo
company
of the
that you
two,
like?
because I can comfortably say, to my knowledge, I don't know a single person who uses this company.
Private equity. Evolution Capital is private equity.
Well, I mean, that's the
Just
thing.
because they're private equity doesn't mean anything.
Banking and financial services
Like,
is sort
see,
of
you're
ubiquitous.
painting
To me, it really
things
doesn't matter
broad brush.
which
No wonder
company
you just
utilizes,
don't
as long
have
as,
any,
of course, they're FDIC
any
insured
nuance to
and
that.
they're under
Right,
the same
Colin's
regulatory authorities, which they are. So, ideally speaking, that's what SoFi's got
Yes.
going for it. It's all about brand marketing and, of course, appealing to everything from digital payments and digital banking. Other products that they offer include insurance and brokerage services. So, this is essentially what they're trying to offer as sort of an all-encompassed financial services company for those who don't want the traditional brick-and-mortar types of services that banks offer. So I think, again, that's something that's not necessarily unique to SoFi, but nonetheless, again, they are increasing the number of active customers on their business or using their apps because if you look at last quarter, it actually grew by 47% year over year. They added about 717,000 more customers, and that's a good thing. But we talked about this one in the past, and if you look at the estimates for earnings, this is what it comes down to: is one, are they growing their sales, and two, are they growing their earnings? And if you look at the sales numbers with additional customers that have been added, their estimates are expected to increase by 29%, about 571 million. But at the same time, the adjusted profits are expected to be zero or break even. And again, that's going to be a challenge, especially when you're trying to grow your business. While at the same time, just look at the regional banks going back to the first quarter and maybe the second quarter of last year where they had struggled. They haven't recovered the majority of those losses since then. So you got to think about these businesses like SoFi that are growth businesses, but they're growing essentially amongst a very large competitive landscape. And I think that's still a structural challenge for the company.
Yeah, George, I completely agree. And I think that what this company was riding on going into this year was the fact that it was really, really such as benefit from some of these resumption of student loan payments. And that tone seems like it's shifted a little bit here. I think it's too early in the year, obviously, to say that like they couldn't still be beneficiaries, but was just that some of this hype maybe a little bit overdone now.
That's the thing. Yeah, I think early on, obviously, there was a big move when the student loan pause was reversed and, of course, payments resumed. I think it was back in October of last year. But at the same time, as the company's generating more visible revenue streams, from what I understand, default rates and repayment rates are actually not the way they were prior to the repayment pause being removed because of people struggling to pay their student loans. So that, again, might be a challenge for SoFi. But, every time, this company makes progress from the standpoint of the price action, the progress sort of gets erased because of the fact that if you just look at figures from the standpoint of profitability, the company essentially is lost about 429 million last year on about 1.9 billion dollars in sales. So they have to finance that hole, and you will see that even going back 2 years, the company's actually issued about 78% additional shares. There was 526 million shares as of Q4 December 21, and looking at the trailing 12 months, the number of shares is now 935 million. So my point is that every time the company makes progress in terms of price, because they're getting closer to break even, and again, if you look at the estimates for 2024, they're expected to print a slight profit for the full year. That progress sort of gets squashed because of share issuances and share dilution. So that's something you have to keep in mind, that, yeah, it makes progress, but then they issue more shares, that progress gets erased, and it's almost like you have to start over again. But nonetheless, the stock is still higher, I think, by 20 or 30% this last year.
Hey, George, real quick.
Seems like that's a positive sentiment, but yeah, I mean, they bring it down a little bit. But look, this guy's been bullish since like last month, right? When the price was $4 or so, this guy was brought in front of your face to do what? They are promoting it, right? Presenting their case. So I'm just doing the same thing, but at a smaller scale, right? But yet people like SpongeBob over here coming after me for what? Like, why? What is... okay, GameStop investors are dumb. Okay, why are you here? If you think I'm dumb, who are you interacting with the dumbest person in the world, right? Are you the smartest or even dumber than me, right? It's like, why waste your time to come in here? But I appreciate that sentiment, though. Really. I don't agree with most investor perception that Ryan Cohen is a investment genius. Okay, I disagree. I'm not saying that he's a genius, right? But at least he's maintaining the cash, right, pretty well. Managing the cash in terms of, GameStop, right? So that's, again, like, I kind of agree with you there, that he's not a genius, so to speak. No. I'm just saying that at least, hey, he could maintain this cash on hand right here, right? If you would compare last year to this year, what is it? Like, you could see the progress. Yes, it's a slow progress here, but it's progress nonetheless, right? So baby step, that's good. At least they're trending in the right direction. So thank you, Manuel, for that. Ryan could have everything to be sold to either private equity. Okay, sure, that's your opinion. They are in a free country. If be more like to talk about GameStop, let her be. It's like, yeah, I mean, again, like, I'm not saying for you to buy into it, right? To me, this is a good price point for me, for the dumb person like me to buy into, right? So if you're smarter than that, then wait or don't or whatever. Do what you feel free to do, right? And my angle is this analyst right here, right? Forecast, right? This is suspicious to me, to say the least. To have only one analyst is willing to cover this company. And for some reason, this is the only company that has this type of discrepancy. You see, SoFi has been in the news. Obviously, they're going to cover that one. And what is the obsolete, like the most unheard of company ever? I don't know. What would that be? That would be like, I don't know, like the least popular. Give me a name of the least popular company ever. Is it Mullen? No, Mullen is more. Yeah, let's do Mullen. Oh, how about AMC? Okay, well, AMC is not popular. It's popular, but look, five analysts, right? Okay, it's a sell. I mean, it's a terrible company to invest in, obviously. Okay, but Wedbush at one point said it was supposedly gonna go up to $19. Okay, $19 from this price point. That's like $1.90 before the split. So just so you know, again, like the history of this company. And again, even this, they're telling you that the low should be 4.75. So why don't you go there? You know, SpongeBob saying that, hey, why are you promoting this? Right? In my opinion, it's a terrible company. Look, net income of this, right, versus net income of $8 million. Okay. I mean, if you compare the two, like, don't come to me and and to say that, oh, it's all meme stock, it's dumb investor, it's all that stuff. Okay, sure, makes no difference. You could say that people who invest in Bitcoin was the dumbest person in the whole world, right? You could say that, and you used to say that too. Like people was somehow. That means something, right? Retail investor need protection from stock pumper. Okay, like who? Like Kramer? Like it's like what? Stop. Isn't there a penny stock before the squeeze? Wow, just wow. Okay. Does that mean a penny stock doesn't have the ability to be a better stock from the penny stock status? Who makes the arbiter determine whether it's a penny stock or not? What is your definition of a penny stock? It's like that it's trade on a pennies? And why are we talking about before the squeeze? I'm not talking about anything about the squeeze right now. I'm talking about the current situation. That's it. Currently, they are a different company. So that's why again, maybe you're just not aware of what's going on in the company so far in this 3 years, and you just immediately thinking about, oh, it's a meme stock. Who gave you that idea? Who gave you that term to say it's a meme stock? A stock is just a stock. Why do you call this company a meme stock? So you have to ask yourself that. I'm sure you're smart enough to come up with certain to distinguish between the two, right? And so if you from a standpoint of before the squeeze, I'm not talking about before the squeeze. I don't care what happened before the squeeze because I wasn't there, right? Right now, at this moment in time, I like the company. That's all, right? Why so many melting? I know. I've been It's actually pretty fun for me, but I'm kind of exhausted at this moment because like it's the same narrative, the same thing coming on. Gabriel, what you got about what you got to say about the balance sheets? Yeah. Try to find the hidden value. Okay. If you think it's not valuable, then don't invest in it. Like, it makes no sense. Like, why bashing it without even taking a look at what makes sense? You know, to me, again, I'm trying to analyze this company because there's no analyst out there who's willing to do that fairly, right? And that's what my quest was, is that, you know, why? Why no one has been covering this since Wetbush? Only one? Really? Only one analyst out there? You have the whole country, the whole financial system, you know, you have network like Yahoo Finance, like a whole bunch of free press out there, quote unquote, right? To cover this stock in a better light, or at least present the facts as it is. Again, I don't care if you want to call it meme stock, right? Whatever. Tell me what's going on statistically about this company. The numbers, right? This is what I respond. Well, now if GameStop were to lose $1 billion next quarter, okay, you might have a point there. You know, cash burns and all that BS that you're trying to tell people. But if GameStop comes out ahead, which this is not my estimate, okay? And I showed this one before, right here. Are these people dumb that telling me earnings right here? Estimated earnings? You see this? Are these people the dumbest person in the world right there? Who comes up with this estimate that GameStop is going to make close to 25 cents a share, 28 cents a share next quarter? This is one quarter. So it doesn't come from me here. This is Wall Street estimate. So who's dumb here? Now, of course, it's just an estimate, right? They could beat it or miss it. So it really doesn't matter. But the point is that they are making an estimate that GameStop's going to make money this quarter. So what's there? Like, is that them pumping? Like, why are they pumping GME based on the number that they're presenting right there? So, yeah, if you look at that and see the the discrepancy, don't you want to talk about it? Don't you want to come out here and like make a channel and say, hey, I see this. What do you think? And all that stuff. Offering opinion. That's how humans grow into the future, right? The evolution of, okay, like the journey of from point A to point B. How do you get there? Do you get there by somebody just pick you up and put you in the point A, from point A to point B? Or you actually have the ability to make that choice for yourself, right? I would much rather go there by myself rather than have somebody pick me up and put me to point B, right? Because at that point, I don't have any choice in the matter. And I can't blame anyone but myself because I allowed that to happen. Does that make sense? Okay, shorters will be bearish, and those who have hidden value, who sees hidden value will be bullish. Options on either side won't likely to be changed, right? I mean, yeah, people have strong opinions about this company. It's a highly controversial topic, so to speak. And again, it's like one-sided too, right? I have yet to hear anyone from, it's like, you know, when people are pumping AMC, they don't get this type of, you know, I don't know what, I can't even think right now. Because of the chat here. True, yeah. Again, like, I don't sway the market, and I don't know how people come here and say that I'm somehow pumping GMEs. Like, what I do have no effects on the price action whatsoever. You know what? Who has the effect on the price action? It's big institution like this. So are you saying that BlackRock is pumping GME right now? If BlackRock were to buy this, and you said that, oh, they bought it because they want to short the company, okay, let them short. But why? They need the share, right, to do so. And why would they want to short their own investment? I don't know. You tell me. Meme stocks and diminishing return go hand in hand. Meme stock diminishing return. Not GME, in my opinion. Right? What diminishing return are you talking about? Are you talking about the price point? Well, price doesn't really matter to me. You know what matters to me? Fundamental balance sheets. Okay? Again, like, you're using two metric so far. That is price. Price is not indicative of anything. Again, between people. You think it's a shit company, right? You would want to sell at this price for me. I think it's valuable, so I buy it from you. That's it. And only time will tell. Only time will show you who's right at the end, right? I think I'm on the right. Winthrop is paid to be here. Expert. I don't know how many experts out there, you guys. I don't. Are you the real expert or the imposter one? But anyway, I'm getting to the end of the chat right here. Thank you guys for joining. I know I've been rambling on and on, but it's pretty fun. Kind of lost my way a little bit here, so. But yeah, man, almost 2 hours here. But yeah, I appreciate every single one of you for commenting and coming in here. Now, closing remark though, at the end of the day, look, I'm not pumping anything. Again, I don't move the market like anyone here. Like, whether you want to invest in it, that's on you. Okay, BlackRock is buying into it. That doesn't mean anything according to Winthrop over here. Okay, if that doesn't mean anything to you, then don't make that choice, right? As far as the balance sheets go, I like the way that the balance sheet sits in my brain right now, right? The fact that declining in revenue, okay, you have a point there, Winthrop, whatever. But if that's the only metric that you're using, I think you're missing out on a great company, great value play here, in my opinion, right? Because they have been doing the right thing when people are not watching. And yes, it's just going to be a slow thing, right? And I'm here for it. Long term. That's what investing is all about. Is you find good company out there, and hopefully, the leadership is going to be aligned. And that's another thing. Leadership is aligned with shareholder right here. Ryan Cohen, although he's not a genius to some people's point of view, I think he's doing a great job right now, at the very least, right? As a CEO, as a chairman, not getting paid for whatever his work is right now. He's just maintaining his own investment right now, right? So if he makes money, if he try to build some sort of legacy here, I'm here for it, right? And the fact that they're pivoting, they're doing the right thing. Well, in my opinion, again, I might be too dumb to know what is going on behind the scene, but really, I don't much care as long as I keep seeing positive here, positive net earnings right here, and then Wall Street estimate of next quarter. Hold on, let me see. Let me show you one more time. So this is quarter, right? Estimate. If you do a yearly, right, it's 11 cents per share. If you do a yearly here, revenue, it's going to come down, right? So people who are saying this type of thing is going to be invigorated because they think, revenue is coming down, industry is declining, physical and all that stuff. Keep using the same narrative, right? But what they don't realize is that, GameStop is not at the whims of this retail sell anymore, right? Because they could use their balance sheets, to use their cash in order to invest in other company. All right. I think, okay, SpongeBob here. Investor actually makes money with Kramer. Greedy people. Really? Investor actually make money from Kramer? All right. Thank you. Go follow him. Okay. Thank you. I appreciate that. I mean, hey, is that pumping? Why are you pumping Kramer? Like, okay. No, I'm actually kidding. Okay, that's your opinion. Greedy people look to get rich quick, will lose money. Okay, I agree with you there. Sure. Yes. I advocating for long-term investing, right? I'm not here to get rich tomorrow. I see the benefit of long-term investing. So I advocate people looking at the numbers, research everything that you have to research first before putting money into anything. Don't put money into GameStop if you think it's a shitty company, okay? If you see the number and come up with a different conclusion, I respect that. Don't invest in it, right? There you go. Grab time me out. They time me out. I am the real expert. Okay, they time me out too. Who timed you out? I don't have any mods here, so. Great job. Thank you, Lionel. Kramer isn't that good. I am the real expert. Oh, this. I know expert. I don't know. I apologize. Like, I don't know which one is your real one. I think I. No, I don't think you are. Like, look at the eye, man. These people. I don't even know. Again, sorry, X-Men. If you're real, I'll believe you. Pack a lunch. Okay, have a great day. Thank you. Thank you. Alright, there's 2 experts. Yes, I know. Alright, guys, that's all I have. Again, I appreciate every one of you. And, yeah, keep on searching. Keep on being vigilant, There's a lot of faux out there. But again, like this, to me, this is a good thing because here, this is a filing. If you want to kind of verify who's buy what. This is BlackRock, GameStop. It was bought, increase in position. There's multiple source out there that is saying the same thing right here. So yeah, always verified. Don't believe anything you hear, and this type of thing happens all the time. So, alright. You have a great day. Okay, bye.